Hi friends, welcome back for Ethereum Technical Analysis. I'm just going to do another brief episode today as we just kind of ask ourselves, where's the price going during this whole phase? Now, we've been talking about this. Is it descending, broadening? Sorry, pardon me, I'll just get rid of the drawings for now. But we were talking in and around this area and saying, is this some sort of descending channel? Is it a descending, broadening wedge? What's going on here with it? And what are our targets towards the top side, and how would we know that we're getting towards them? And the obvious thing that we were talking about quite clearly recently was, can we get above and establish the prices in a longer term basis, more than just a couple of hours, up above 2017, 216, 217, 218, and go up to that 220 level and actually go above that? Is that possible for us, or are we going to see the prices retrace from there back down to the mid 207 area, as they are, for instance, at around about that $208 price point that they're at now, and then fill it more towards the downside of that channel or broadening wedge? Now, if I put the drawings back on and discuss this again, you can see, I'll just bring it up full screen as well. You can see that that during this period here, that this high here actually came a bit higher than what we were comfortable with in terms of it being a descending, broadening wedge. But when initially, just a few days ago, as we were talking about when we had the lines coming down here on the charts, what was it? Was it like that? It's hard for me to remember exactly. It's always hard to sort of redo these after you've moved them, with the gestalt nature of things. But we had it like this, and we said, and this was over a weekend, and we thought that this low didn't really necessarily count, and it could be coming up here and forming actually instead, perhaps a channel instead around this area if we break above it. And of course, we did break above it again. And then we said, well, the truth be told, we actually still have a descending, broadening wedge here. It's just very wide, and will we actually manage to break above this sort of 215 area, just as a round number, and go up towards that top side, or will we see resistance here? And when I'm saying that, I'm not a financial advisor, and none of this is financial advice, but that was a fairly clear area in order to, that you could be taking a short from down to here and looking at this. So, but let's, instead of looking at all of these patterns and everything else, and if you want to see all that chat, still available in all the previous videos. They're all less than 10 minutes long. You could watch, you could easily, for 30 minutes, you could sit there and watch 3 or 4 days of pretty, good technical analysis for Ethereum and be fully up to speed. So what we're going to do in this episode instead, well, we're just going to take that away, and we're going to open up the oscillators down below. We're going to go down to the 12-hour time frame, and we're going to ask a couple of questions about this upward movement here and say, is it divergent or not divergent since we saw the prices come down to their most recent low in around the 10th and 11th of May. So looking towards the tops of this candles here, here, and here, is there lower highs on this RSI or stochastics? And there isn't. This is not bearishly divergent, so that's good to see. If we go down to the 4-hour time frame, we do the same exercise. On the other hand, what do we see there? So between this high, and the previous one to it, that was fine, and then between this high and the next one coming up, that was also fine. But then between this high here and the next high, which is higher than it by just a couple of pennies, or 20 cents or 10 cents or so or whatever, but it was higher than it. We've got divergence there, bearish divergence in amongst this area as we consolidated actually really overall, and then subsequently the prices have dropped down a wee bit. And then if I go back to the 24-hour time frame and put the drawings back on, and I look here and I say, well, if we have this descending, broadening wedge top coming in around about this area here, where we got touches off these wicks and whatnot, what could we look for during this period to ask, will we get a slight pullback in the prices? And that's one way of doing that sort of a thing there, as I've just pointed out. And you can see as a result then the prices drop down after as we has this bearish divergence on the go here, with very unflattering, marginally higher highs and higher lows during this period, of which actually in a lot of senses looks like consolidation anyway. And another thing then that you're more than welcome to do in your charting is to draw in a triangle along these sorts of lines here, and say, well, if we did get a breakout, perhaps a breakout would look something like this, and we'd be going down towards this sort of price points here and around the sort of $205 or so. And you can see that the prices did come down to sort of $205 or so as well. And should you be so exact with those sticks and those measurements? No, you shouldn't, because this is subjective. I could have very easily have had that green line there a dollar or two higher, or could have had it, this purple line here, could have had it just, a little bit higher there, a little bit higher there, and then it works. So you look towards sort of areas and try not to be too greedy with your trading. And really, rather than go on about anything specific in terms of the current price action, I'm going to mostly leave that up to you. And I hope that you're okay with that and that you like this video, and I hope that you subscribe for more content, because what we do here on the channel is FOMO-free, greed-free technical analysis, and normally go into quite a lot of detail with regards to what we're looking at on the charts from both sides of the story, so that you're able to figure things out. And then I try to impart lessons like this divergence one that we've just looked at there now, so that you can really take this forward and create your own trading strategy enhanced with this extra knowledge that you might have. So you could be looking at any indicator, and I'm agnostic about all sorts of things. You might have the sort of volume profiles down below. You might have the dots that get drawn on here on the charts that show you the ranges and various different things. You might use the lines on the MACD and look for crosses and whatever else. I'm agnostic about things. I don't think there's a stupid way of trading necessarily in terms of the methodologies. I just think that the ideas are all fairly solid for the most part, but it's the execution of those ideas that leaves a little bit to be desired. And that just to try and enhance people's skills by giving them a bit of knowledge like this is really what we're all about here on the channel. So I'm just kind of talking about that today. And I wanted to point out then, I suppose, this dynamic yet again, where we have the golden cross having happened over here. If we look at this in terms of the 50 and the 200, but if we change this to 280 and just look at it as if you were having working weeks and weekends, that is, and so you included this in terms of the golden cross is a specific thing, and it comes from traditional trading. It uses the 50 simple moving average and the 200 simple moving average. Of course, traditional markets have weekends, so that's why those numbers are like that. And then if you carry that across to 24/7 markets, then you've got a choice. It's on you. It's your specific choice. So a lot of people, if you look on Twitter and everything else, they'll use these in terms of crypto technical analysis. They'll use these terms like golden cross, and they don't differentiate between whether or not they're including weekends in their one or not. And I tell you that 99.9% of the time they're not. They're just using the standard 50 simple crossing over the 200 simple, and that's fine. But let's just look at it in terms of if you were trading this Monday to Friday and the markets were closed over the weekends, what numbers would you need to look at to create an analog of that traditional market cross with the crypto 24/7 markets? And that is 70 and 280. And you can see there was a death cross back here. We come down and tested the 200 simple, and if you look to the left, you can see the 280 is very much a flat moving average overall that gets tested numerous times throughout. Is it unreasonable to think that during this period of price action, we're in a descending Broadway wedge, perhaps, that we could come down here and perhaps put in this next lower low as part of the descending Broadway wedge structure and test this 280 simple moving average here, and perhaps even the 50 which in this case is 70, but it's an analog for the traditional market. So the 200 and the 50 would be around here in death cross conditions. Would it be unusual to come down and retest these after this cross having happened as part of this overall structure? It wouldn't be. Okay, so that's just to temper things. In terms of the broader time frame, if I go up to the weekly chart, then you can say, look, we're in a weekly uptrend. All we need to do is see the prices go just above $215, and we're continuing that weekly uptrend. So the trend is your friend until the end of the trend. Don't get me wrong at all. Do not get me wrong. And in which case, if you put this back on 50, oh my goodness, how much quicker it would have been just to go to the button at the top. If we go back to 50 and 200 here, and look at this, you can see there was a big old golden cross over here, golden cross, traditional 50 and 200 crossing over each other. Of course, that we're using weekends here. Let's just ignore that and look towards the top side and say, look, well, this 50 is coming in at 185 at the minute. If we were to have some downside action, what would be a decent enough target for us in terms of them? Well, you've got the 236 here. Do you want to see the prices remain above that? If we're going to look at this chunk of time here as being this upward trend, two reasons. This is the previous low, so you'd want to have no lower lows coming in as part of an overall upward trend. And I'm just literally talking about this chunk here. Okay. So you'd want to not have the prices drop down below this area here because that's the previous low. If they do, there's a 236 Fibonacci retracement in here at 194. Breaking down below that validates it all of a sudden, and you could look down to 173 as your 382 Fibonacci retracement, where you'd be going past both the 50 simple and the 200 simple here as overall as part of this arrangement here during this time frame. And that would all be happening in the face of this golden cross that happened just here. And that's helpful to see the context of just changing the numbers over a little bit. Of course, beforehand, we've got the 21 EMA in here, which you could see if you're part of a handy high or low area, that would be in around about 200 flat, and 200, of course, 202, $201, where we would obviously expect to have resistance with it being our support, with it being a round number. Bear in mind, this is higher than it is over here as well, so you've got this consolidation potential for us in this area as we put in, as we have conflicting information with a lower low and a higher high, and it's all, instead of it being higher lows and lower highs, it's the broadening aspect towards that. So you can bear that in mind too, and that's in terms of, if I was watching this channel, I think that would be more than enough for me to be able to say, oh great, that's great, I can actually run with this, I've got a bit of context here, I'm going to stick on these indicators that I like because of my own idiosyncrasies. Now, of course, whenever and there are other indicators that I look to and I don't talk about on the channel because they're just not worth talking about in terms of fitting them into this easy to integrate technical analysis. But so if I was looking at this, I think, oh great, okay, so I can think about things in some context here, and maybe I'll find something out here which is helpful. But primarily when I do my own trading, this is what I'm looking at, and this is everything that I need to be able to make decisions off the back of, and I'm able to do this fairly successfully. So I think that you should be able to too, and I invite you then to join me by hitting the subscribe button for daily technical analysis, and in future I'll be a little bit more sort of forthcoming with the technical analysis and less chatty about why we do this and the philosophy behind it. And just let me finish by saying, of course, the 220 is the target, 215, 220, 225, 230. There's various reasons for those. Looking over towards the left, you've got a 50% retrace in here at 225, for instance. Various reasons for them to come up and get at least tested at some point. You could easily see it turn around here. In terms of looking just in general for an area for the price to turn around at, you've got this candle here that came down. This is consolidation here, so you could see it turn around in this area of their consolidation where we have the 50% at, or all this happened at in the past, for it to just literally turn around here and dump down the way. It doesn't have the context you might be looking for, looking towards the left, other than just the price action that we've been going through recently. Anyway, I think that's a lot of information to be running with, and I'm going to leave it at that. Thank you so much for tuning in, and yeah, let me know how you're getting on out there in the world, and I hope you're staying well. Stay safe out there, and I'll catch you next time. Tomorrow's episode will actually be shorter. I'm making shorter episodes tomorrow for all the coins, but I thought I wouldn't just surprise you with that. So here I am making the usual kind of length episodes, and then I'll be doing the sort of the tight episodes tomorrow. Fingers crossed I'm able to achieve that, and we can discuss things again then. I think it might be a bit briefer, but maybe a little bit more digestible for you. I don't know, and we'll see how it pans out. Thanks so much for tuning in. Be sure to hit that subscribe button and like button, and share this video with a friend if you've got one that think might benefit from it. Of course, not for my artistic skills here, as I'm only really good at drawing vortexes on the charts, but in terms of the technical analysis, it should be pretty good, But somebody did say in one comment down below, I heard you're an artist. Not really. I'll catch you next time.